Hi traders, this is Cynthia of Daytradeforex bringing you another training video for the new color ribbon surfing system, and this is for the advanced system with the added features, and this is just a basic profile setup, and I'm just going to run through a few tips and pointers and show you how I set it up and trade out of it. So the very first thing that you need to do is to go to your toolbars and make sure that the settings are correct and needed for the easy order and the trailing EA to work properly. So first thing you do is go to Tools, Options, Expert Advisors, and make sure these 4 inside boxes are unchecked and the 4 outside boxes are checked. And you need to check with your trading platform until several times until you're sure that your broker allows these settings to stay instead of changing them, reverting them back, because these are the way the settings are supposed to be for the easy order and the trailing EA to work correctly. So that's the first thing you do. And this is how I've set up my profile for the Asian session. Actually, I have several Asian session profiles because you always need at least the charts to be big enough so that you can see at a glance what's going on. If you get too many charts on your screen, you're not going to be able to see at a glance, and you're going to be opening charts, and it gets too hard. So if you need more than 3 pairs to trade for a session, like for the Asian session, just create 2 profiles. So this is one of my profiles, and then I have another profile, and if I were to set these charts up this way and I want to save them, you go to File, Profiles, Save As, and I know that this is Asian session B, so I'm going to resave over it. Say yes to overwrite, and basically that's how you can overwrite any profile that you've already set up and create new profiles. All you have to do is put the charts up and then create the profile and name it for that particular session. So I have Asian session A, Asian session B, same for the New York session, same for the European session, or the London session rather. So you can create as many profiles as you want, just name each one, and then anytime you want to change the profile, you can go down here and you can choose any of the profiles that you've already set up before. So now let's see. In order to trade out of a profile, I always start by looking at the daily chart. And so you can see these 3 different pairs are set up with the daily chart on top and a 15-minute chart on the bottom. And I always check first to see what the major trend is for the day, and then I do what is called drilling down. So I drill down starting from the daily chart. I drill down to the 4-hour, and you can see the Forex Factory Calendar headline popped up because the settings I have, it doesn't work on a daily chart, but you can change that if you want to. And then you see that the trend is very up and hanging around this sweet spot or minor key level of 93.25. Okay, so then you drill down to the 1-hour chart, and you can see for the last 5 hours it hasn't pushed too much further past this 93.25 minor key level, but this is Friday, a Friday chart here, so it's gone as high as it can go for the day, and that doesn't matter at this point because I'm just teaching you how to trade and how to analyze the different time frames so you can trade out of the 2 or 3 chart setup. Now we jump down to the 30-minute time frame and look at the trend. Jump down to the 15-minute. That last 15 minutes of the day, it really spiked up. Now that's something that may or may not affect the Sunday trading. Traders might start taking profits, or they might continue to push the price up. Okay, then you jump down to the 5-minute, and you can see here we've had a lot of consolidation in the last 15 minutes. This is the push up at the end of the day. So now to actually trade, I would go back to the 30-minute chart, because you can see what's happening just a little bit better than in a 1-hour chart. And now if you actually wanted to trade, what I do is, we know the trend for the day is up, so you always want to trade with the major trend, and it's confirmed by drilling down to each lower time frame. And then if you actually want to place a trade, I would use the 30-minute time frame to attach the easy order to, and the reason is that if you decide that you want to go long here, just click and buy, and then what it does, let's open this window so you can see. The easy order is wonderful. It automatically places your stop and take profit lines at the latest support and resistance. So here would be your stop, and here would be your target for your take profit, and it is above the 93,500. However, now would be the time to move it if you wanted to at least another key level up, and you could even move it far up past the major key level. It's very possible that at some point it could get up there, but now is the time to double click on your horizontal easy order take profit and stop loss lines so that you can adjust them. And it's easier to do this before you click the submit order. Now, depending on your account size, I would either use 1% risk, or right mouse click here, unselect risk base, and you can have it be the lot size that you want. This is how you change it. 0.5. That would be a reasonable, or actually 0.4 would be reasonable for the size account that I'm playing around in here. So now you have your easy order on your chart. You've adjusted your take profit and stop loss, and your risk to reward ratio is going to be a minimum of 2-to-1. And the way you can figure that out is take your crosshair, and this is going to be, if you decide to go long here, you could pull it down to see how many pips it would be for your stop. So that's a 23 pip stop, and your target is 70 pips. However, your first target would be the next minor key level up, which was 17 pips. So that's not quite a 2-to-1 risk to reward ratio. So if your first target is only 17 pips up, you really want to move your stop loss up higher, and then see what your risk to reward ratio. So that's 14 pips to 17 pips, not counting spread. That's almost a 1-to-1 risk to reward ratio, which is the absolute least risk to reward ratio you should use. So deciding where your stop is going to be is crucial, but you do want to have it around a major support. You never really want to allow it to hit your stop loss, so you can have it a little bit wider, especially for news events. You really need to give it more breathing room. So bring it down to where the latest support is, and then the trailing EA, if you're trading news, for instance, it'll and you're using a precept for the news, so you just click that to look at the precepts. Here's a take profit level will be 20 pips. This is an ECN account, so 20 pips. It's going to close out half of your trade. in profit because we're using the use partial close. One means true. So it means that when the trade reaches 20 pips in profit, it's going to close out half of your trade in profit and then move your stop to break even. So we're using trailing stop 5. I always use that for news. There's all these other trailing stops you can use. And here's the trailing stop. It's going to start trailing at 20 pips, and it's going to follow 15 pips behind the price. So that's not really a good setting for news trading. It's more for a day trade, not quite a swing trade, but to load for a news trade, for instance, you could use your scalp 5 minutes or scalp news, or the 5-minute super scalp, or non-farm payroll 5-minute, which is pretty aggressive. But you'll just have to learn the settings for these. Now this means that the partial close is going to close your trade at half. It's going to book half of your profit, half of your lot size, at 15 pips when the price moves 15 pips into your desired direction. So half of your trade will be closed in profit, and then the trailing stop moves in. Also at 15 pips it starts and trails by 10 pips. So that's okay, because if your first target is about 17 pips, well, here it says 19. It's hard to be exact when you're using the crosshair. But at 15 pips, it's going to book half of your lot size and move your stop to break even. Now, often the price will push beyond a minor key level. Sometimes it'll bounce off. So if it bounces off and bounces down, it retraces, you'll probably get stopped out pretty quickly. So that just happens sometimes, but if the force of the trade is really, really strong, it'll just keep going and it'll lock in some nice profit for you. So that's how you use the easy order, and that's how you use the trailing EA. Now, when you place the trade is the next important issue, because in the 30-minute chart, that's how you're going to place the trade. You're going to use the easy order and the trailing EA on the 30-minute chart. One thing you do need to do is remove this trailing EA from this other Aussie Yen chart. You have to remove it so it doesn't conflict, because it might have a different preset. So you're going to monitor your trade in the 15-minute chart. You can even move down to a 5-minute chart to monitor the trade, because when you place the trade is going to be based on the lower time frame. So what you want to do is you never place a trade when it's spiked at the top of a bar. You wait for it to pull back. It always pulls back. And if it doesn't pull back and you've missed a nice run up, well, I guess that's what you call tough luck. But it will happen. But most of the time, especially if it spikes up on a news event or something, if it has a fast spike up, it's always going to retrace. And that's where this Fibonacci retracement tool comes in to play, because for instance, let's open up this 5-minute chart here, and well, this Fibonacci retracement tool is based on this latest trend bar, so it's really hard to show you how the Fibonacci retracement tool worked in the past. But let's hypothetically analyze this and say, okay, this last 15-minute bar, it really spiked up. So before it goes any higher, more than likely it's going to retrace. So it's going to be pulling back. And the first retracement level is always the 23.6. That's a very minor retracement. If it starts going back in the major trend direction again, it's not going to be a very high push, not a very strong push. There's not a lot of power. Think of a rubber band being stretched and then snapped back and released again. So here you have the rubber band being stretched. It's going to snap back, and when it's released again, the power of the new force is going to be dependent on the depth of this pullback. So a 23.6% retracement pullback is not a very deep pullback. But if the price on the next bar, or even on this bar, retraces back to 38.2% and then resumes in the major trend direction, it's going to have more force and it's going to go farther. So it's important to learn about these retracement levels, because the deeper the price retraces on the next bar, the more power it's going to have when it goes back in the major direction. So if on the next bar it pulls back to say 50% or even 61.8% and then goes in the major trend direction, the deeper the pullback, the more force it's going to have when it resumes the major trend. That's a tip. So you have to make sure that your stop loss always stays below the 61.8%. Maybe around the 100% would be a great place for your stop loss to always be. Let's see if we can, I don't know where it went. Too hard to find it. Oh, that's because we're in a 5-minute chart, and we actually put the easy order on the 30-minute chart. So you would have to just eyeball this and say, okay, on a 5-minute chart, which is where you watch the retracements. Now you're not going to be trading out of the 5-minute chart, but you are going to watch the trade in a 5-minute chart. So you can see here in the 5-minute chart that the 100% retracement is 93.22. Now that's a clue, that's a tip for you of where you should have your initial stop, because you do want it, the trade to have enough breathing room to do the retracement, and then so it can snap back and go in the opposite direction without prematurely stopping you out too soon. So 93.22, is that what we said? So here we have it at 93.10. So that's just a little bit, not necessary to have it quite that, but here we go, 93.22. Now that really improves your risk to reward ratio actually, and gives you a little bit more breathing room. So that's how you analyze, and that's like an 11 pip stop, and your first target is 17 pips away. That's almost a 2-to-1 ratio, and you'll probably at least get a 2-to-1 risk to reward, and that still gives your trade breathing room for the 5-minute pullback. Okay, so this is where, or 93.50, let's see, 93.21. I think we did that right, I don't know. Anyway, you have to write these things down on a piece of paper. It's hard for me to do this while I'm talking because I lose my train of thought too easily. But I really hope that you get the idea of how you can use the Fibonacci retracements to know what to expect, to assume that this price is going to at least pull back to the 23.6, if not a little deeper, and possibly to the 61.8%. And if it pulls back that far and then resumes in the major trend direction, it's going to be a very, very strong push, and you can expect it to go up 1 or 2 key levels if it goes that strong, and possibly keep going for a while. So just make sure in a 5-minute chart that your initial stop loss at least is at the 100% Fibonacci line. That gives your trade plenty of breathing room. So I think the next thing I want to talk about, on this, if you do want to remove the Forex Factory headlines, if it's in your way, just go to right mouse click on your chart. Whoops, right mouse click where it's blank, go to indicators list, and Forex Factory headlines, click delete. Okay, and then that way in any of the charts that gives you a little more room, but you do at least for each pair, especially if they're different cross pairs, you need these headlines, you need the information. Now here's something neat that you can do if you want to change pairs without switching profiles. Say you want to trade the your odd. Okay, just select your chart by left mouse clicking in the chart, go here, left mouse click there, and drag it. Really quick and easy. You can look at different pairs that way really easily. Okay, so that's how you use the profiles to trade out of. This is these chart setups are not for scalping or news trading. These are just for day trading. And if you want to swing trade, maybe you'd leave the daily chart and go to the 30-minute chart, and you can monitor your trade in a 30-minute chart if you're swing trading. This gets you really good entries in a lower chart, but you're always just going to be trading in the direction of the higher time frame. And if you want to say day trade, just do something like this, and you can watch the retracements in the lower time frame. And if you want to get a perfect entry, just change this, say to 15-minute, and change this one to 5-minute. And then you can see this is a long spike, but look at if you had gotten in back here, well, that wasn't an acceptable entry. This was your first acceptable entry at some point after the white X disappears. Or on this candle if the white X hasn't disappeared, or appeared rather. So this actually would be your better entry here, and you do get a better entry in the lower time frame, but always trade in the direction of the higher time frame. So now that I've thoroughly confused you, I hope I haven't. I hope you've learned enough just from this short video, you know, how to set up your profiles, how to save them, how to change your charts, how to make sure your settings are correct, how to trade in the major trend direction and use the lower time frames to watch your retracements and to get the better entries. And I'll be making more training videos during a live market. Those are future videos. For now, I hope this helps you, and thanks so much for watching, and I'll see you in a future video, and hope you get a lot of good trades in. Thanks for watching.